Chapter. We're talking real money.
Let's talk about trust. Trust is a big, big, big thing. And often we misplace our trust. We trust those we shouldn't, and we don't trust those that maybe we should. We're not very good judges of what to trust and what not to trust. And when it comes to money, trust is so important. We talk about trusting, not even trust. I usually say don't trust and verify. Just do both. Don't trust and verify. Because it's hard to trust.
Okay, let's just stop right there. That is because this is a key point. You have a general distrust of things. I have a general trust of them, which comes from our backgrounds, I think. I grew up in I don't want to get too analytical here about who you really are, but for me,
do you trust the financial services industry?
No, I do not. But I do.
Wait. Oh, excuse me.
But if somebody
you have a similar degree of distrust as I do.
No, but if somebody walked in the door and said, here's something to believe, I'm more likely to believe it. You're more likely to disbelieve it. I think that comes from the way we were raised. That's just my take. I came from an environment where, you trusted each other. I'm not saying you didn't. I'm just saying in a general sense, I trust things more than you do. I think that's true.
When money is involved, I'm trustful in relationship issues, I think, and the like vary. But when it comes to money, I think it pays to be.
I think you're right.
Beyond,
I've had people steal from me. Lots of money.
I have too. Yeah. Lots of money. I mean, I had a nice little woman who lived next door. She worked at the church in the nursery, and she was just a fine, upstanding citizen. Her husband was the head of the water board, and we hired her to work with us in our company when we did the Don McDonald money letter.
That's right.
And this woman, while we were on our honeymoon,
how much?
Stole $13,000 from us.
I had a guy that when I was moving, I was in the process of selling a business. I needed somebody to run it while I took a new job, and he stole about $20,000.
Yeah.
Wow,
So, when it comes to money, money brings out the worst in us, but that's really not the trust we're going to talk about today. We want to talk about trusting the institutions, I think. I think this is more about the big institutions. And the institution we're referring to is a massive global institution that's really hard to quantify, and that's the stock market. Do you trust the stock market?
Let's back up.
Do you?
The reason we're doing this topic is I read recently in an article that only 12% of people trust the market. Then I went and did a little more work. I was looking around other surveys. I found this one from Magnify Money that says only 17% of Americans completely trust the stock market. Now that's a big qualifier there, completely.
Did they explain anywhere in either of these articles what they mean by trusting the market? Because
I think that's smart. No,
I trust the market to do what it's supposed to do most of the time. And that is to act as a marketplace, thus the name The Market, for buyers and sellers of securities. And we usually think of stock, but it's the bond market, it's the commodities market. To me, it's a relatively efficient place to transact business.
Yeah, and here's the part that's interesting. You have to say, after reading this, a majority, therefore, of Americans distrust the markets. And that, according to them, is despite the fact that the Standard & Poor's 500 has gone up more than 27% since 1970.
Well, that's a lot. That's where the devil is in the details. What don't they trust about it? What is it? Do they not trust that it's a fair marketplace, that there is market manipulation, that if they invest in equities or bonds or whatever, they're going to get ripped off blatantly?
No, I think that's a good question. It's not answered in the survey. But I think if you went and asked people, because we do, the people that say, well, I don't want to put it in stocks, that's too risky. Why is that too risky? Because it's a casino. That's what they equated. I'm just I'm rolling the die. Oh, it came up a 7. It needed a 6. That's what they truly believe about the market. They believe it's a zero-sum game too.
Okay, so it's the zero-sum game argument.
Right,
for every winner, there's a loser.
That's right.
And for every winner, there's a loser minus the house's take, the commissions and fees. So therefore, if you believe that, the stock market over long periods of time, this is a way to look at it, everybody. Got this? If you actually believe that the market is a zero-sum game minus the house's rake, then the market over long periods of time should never go higher. It should always go lower.
Yeah, it would have to. And
the math requires that.
It would. Their survey found confusion over how the market works. 32% of the people surveyed. That's the biggest reason people don't trust the market. So I did my own little survey. I went around the office and asked people.
It doesn't count. They all live. They all live money.
They're younger people, and I asked them why they think the American public doesn't trust the market. And the number one response?
They probably, because now we're talking about advisors or everybody?
Nope, these are young folks that work in our support
admin
staff.
and the like.
Yep,
okay.
Yep. I didn't ask the advisors because
you know what they know.
Yeah,
what they know.
Yeah. They believe the number one reason is that they don't understand it, that most people don't know what the stock market is, which we'll talk about what I think you should know. Number two, that in a general sense, the news about the markets, et cetera, is negative. Most of the time, the big headlines are market declines by blank, fill in whatever the number is. That's most of they rarely say, oh, what a great rally, every once in a while. But for the most part, the news is negative. And so people fear that. We know that human beings emotionally are built. There's a stronger urge to keep than to make. I don't want to give anything up, right? I made that money. I don't want to put it in this casino and see it disappear, correct?
Yeah, and hang on. I'm going to take a quick survey of the entire staff here at my office in Florida, see what they think.
See what the dog says.
What do you all think? What? Hello? Where? Oh, sorry. They have no opinion.
For us to say trust the market, 2 down.
No one here. Pretty empty place. It's just an echo.
So again, we know most people would prefer to keep what they got rather than make. That's a general thing about human beings. They also, the staff said, some people don't care because they don't have the money to invest anyway. So they don't really pay attention to it. All they hear is the market went up or way down, et cetera. So there's all this sort of volatility that concerns them. And they are, in a general sense, risk averse. People, again, they don't want to do something dumb and see their money disappear, which I think is very fair.
Of course it's fair, but that is likely, when you look at history, the only scenario in which that is likely to happen, if you invest the way we suggest you invest in the market, is if you're timing and then that's not how we suggest. Actually, if you invest the way we suggest, then the fear factor should almost vanish. The fear of the market doing something bad.
But it is back to the start here, and that is the lack of understanding. Most people don't get it. It feels like some sort of a betting place. I use casino, but like I'm taking a chance here on XYZ stock.
And it is if you're Hello Kitty or whatever his name is.
The front running guy on, shut him down.
I just recently read a piece that said the SEC is going, we don't have any laws that forbid what he's doing.
Right. You can just go, Don McDonald said this, and then.
Well, no. The law forbidding that is the fact that I work for an investment advisory
but if
firm.
You didn't.
But if I was just me and I had a blog and a million people read my blog and I said, I just bought a stock and it's worth a small fortune, and you all went out and bought it because I bought it, I wouldn't have done anything wrong. I can see why people don't trust the market now.
Yeah,
okay,
exactly.
Thank you. Now I could see.
Beyond all the other advice you get, which most of which is outrageous too, right? I mean, it is exactly that. Here's what's coming. Here's what's not coming.
So we can in part blame less than honorable people. I think that's the best way to put it, because we can't say that Hello Kitty is a crook. We can't say that. That would not be accurate, but we can say that he may have ulterior motives, like making a lot of money.
A lot of money. I mean, ulterior
on a
motives
stock
is a big
that
one.
is not arguably, I think it's unarguably overpriced.
Well, which one is it? GameStop now?
GameStop.
AMC?
It's GameStop.
Okay.
Yeah,
I mean, I thought maybe AMC having just been in the news with
the latest
MoviePass.
I read, and it was a little while ago, was his position in AMC is worth, ready? $260 million.
Wow. Does that make him
Not
a
AMC,
major shareholder now?
GameStop.
Major
GameStop. Well, it counts all of his options.
Yeah,
because his options are all they're all profitable.
But that does get back to this whole aspect again of, and I've got my suggestions on how to overcome fear if you are fearful of the market in a moment. But I think this all goes back to the number one. They don't understand it. People don't understand it, that there still is not any source of like quality education if you're a young person about how this all works.
Except for there's one source. What's the name of that podcast?
We're going to do this.
Oh yeah, Talking Real Money.
Oh, okay. Well, let me talk
We're going to
about.
tell you the truth about money.
Yeah,
Did the
true.
articles, by the way, have any solutions?
No solutions. I've got a couple solutions that I really like. Wouldn't surprise you to know that.
Tom on Talking Real Money has a solution, ladies. And gentlemen.
Okay. Part one. We know this, and we say this on a regular basis. Is because if you look back, we just said S&P 500, according to Magnify Money, is up 2,700% since 1970. So people, I think, generally say, yes, stocks have made money, right? Generally. Mm-hmm. But that's not emotional. That's like intellectually it have, but emotionally, I can remember 2001 because I was a kid and my dad was crying because he lost so much money, or 2008 or 2020, et cetera, et cetera. You have to be successful at this, you have to save something, invest it, and then avert your eyes. Sorry, that's just the way it goes, because there are going to be really bad days and you're going to think, God, why did I do that?
The old John Bogle, don't peek.
Don't peek. It's true.
Tom still remembers the 29 crash. It was such a trauma for him.
It's just very difficult.
Number two.
Number two. And this is the part that I think most people don't really think through. When you're buying stocks, what you're doing is buying into capitalism. Really, in a way, because you're betting on businesses, right? You're betting on a lot of businesses.
When you buy stocks writ large, when you buy a massively diversified portfolio of stocks, you're buying the economy. If you're just buying GameStop, you are not buying the economy.
No, that is a total bet. That is a casino. And especially that's
the problem, is that the same market that allows you to own the economy also allows you to gamble.
Yeah.
I think that's where most of the confusion comes from.
You're right about what truly is investing, which brings me to number three, which is, and I can say this ad nauseum. I tell other people sometimes.
Sorry, I was feeling a little nauseous.
Nauseous. You've got to figure out a way to squeeze the emotion out of money, period. You just have to, because otherwise it will eat you alive. I've seen it. I've actually seen. I had a guy in here about 7 or 8 years ago that said he gets up every morning, he checks every account he has, then he turns on CNBC and watches his portfolio go up and down. His face was red as he was saying this. He does it he's not a client anymore, but he did it every day. And I said, I think I
know who this is.
Yeah, you need to find a new avocation, because this actually will kill. I think may have killed him by now, but his face was bright red as he was saying this. I've seen it happen. I mean, it will happen to you if you allow your emotions to overtake you on all these things. And that's
why we tell you to ignore all of it.
I know.
You really should never. There is literally zero value to CNBC, to watching CNBC or Fox Business.
Well, entertainment.
There's not even any real entertainment there. Come on. Jim Cramer?
Isn't he throwing stuff around anymore?
He doesn't throw stuff. He punches a button once in a while.
Oh, okay.
But heck, even Jim's saying, buy the S&P 500.
Wait, what?
I know.
He's
in his calmer moments, and then he screams about stocks. And because that's the showmanship part of the show.
Yeah.
But he knows deep down in his heart, just like almost everybody does on Wall Street, deep down, they know that just buying the market is a whole lot better. They just can't say that because their livelihood is threatened.
It was the publication that once said, by day, we tell people the best 10 stocks to buy. By night, we use index funds. And that's what the media does,
I think that may have been like Knight Kiplinger, because we had we had a conversation with him years ago about that. And he said, there would be no magazine if we didn't give you the 10 stocks to buy now.
We need pornography to keep it interesting. Yeah.
Yeah.
Or no, we're supposed to call it
cheesecake.
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 I get confused easily.
Look it up in the TRM dictionary. So, Talking Real Money Dictionary.
Do I think you should trust?
Hodgepodgeitis is in there too.
By the way, which 2 people this week called and said, I have it. I got to get rid of it. I feel bad. Don's going to laugh at me. I say, he's not laughing at people anymore. That was the old Don. The new Don doesn't do that.
He's laughing with
kinder, gentler. But do I trust the markets? Yes, but here's another thing: the time. I trust them in the long haul, but in the short haul, no, because they're going to go up and down and make you crazy.
But you see, the thing is that the markets still work, and that's coming clear back around to the beginning. The market is working. It's not the market that is the problem. It is the people playing the market that are the problem intraday and day to day. They're the problem. It's the players that are the problem. Investing in the market is still a relatively safe thing to do.
Has been, by the way. We never know starting tomorrow.
Okay, it should be a relatively safe thing to do because, and this is just pure logic, and I know logic is hard for a lot of you. I know it's really challenging to think critically, but think about this for a minute. I say this all the time, but I don't think people get it. Those of you who are worried about the stock market plummeting and never recovering, that would require the destruction, the complete and utter destruction of global capitalism.
And that's what I'm saying. You're making a bet on Capitalism Inc.
So
really.
If it fails, then you're going to have, as my grandma used to say, you're going to have bigger fish to fry.
Other issues.
Than the little fish you're frying right now, worrying about the stock market going down.
Guns, ammo, and
Costco food.
Yeah. I still think the better investment of $2,000 at Costco is better than the gold bar is to buy that year's worth of food supply.
Heck yeah.
You're gonna
and then go to dehydratedwater.com to get your lifetime supply of dehydrated drinking water.
Exactly.
Comes in big cans. Just add water to get water.
Oh, there you go. I have mine. It's called an above
I'm thinking
ground
about,
pool.
I'm thinking about selling that. It'd be like the pet rock.
Good.
Come on. What a stupid idea. Dehydrated water. Yeah. Well, Don McDonald came up with that. Oh, well, that makes sense.
It'll work. All right. Let's throw a couple questions here.
Okay.
This comes from Annette in Hollister, California. My Roth IRA is currently managed by Edelman Financial Services. The account was moved from
them.
TD Ameritrade is now at Charles Schwab. Okay. It is currently invested in the following ETFs and closed-end funds. Now, she gave us a long list, but there's a few of them in here that you'll find interesting, Don. Because Rick Edelman's a guy that did agree with our approach for many years.
Sort of, kind of, but he was very expensive.
Yeah, he was expensive, and then he kind of veered off into some other stuff.
But his company got acquired by Financial Engines.
Yeah, but he's trendy.
He acquired them, or somebody acquired them.
Remember, because he was running around the country telling us why we all needed cryptocurrency in our portfolio.
Yeah.
Among other things. So here's the portfolio. So some of the things, I get, but then they have things like KOMP, which I'd never heard of, which is new economies. It's a bit of a narrow bet on specific stocks.
This is Financial Engines?
Yeah. Take a look. KOMP.
I'm looking it up. KOMP. Yeah. Go ahead. You can keep talking.
SPHV, which is a high beta S&P fund. XT, which is Exponential Tech.
Wait a minute. I thought they used to agree with what we did.
That's what I'm saying. This is you get the devil in the
Financial
detail.
Engines wanted to buy us.
Yeah, they did. They actually came to the office.
They did. They were looking to buy us.
Yep.
Let's see. Hold on. I want to look at that. Let's go back to the Spider S&P. Okay, so it's from S and it's from S.
Yep.
It's from what their name? BlackRock.
Yep, BlackRock.
What's in that portfolio?
Which one are you looking at now? KOMP?
Yeah,
or
KOMP, the New Economies. That is 400 and some odd stocks. It is heavy mid-cap growth. It's sort of on the growthy side of blend. It's funky. It's really strange. It's 20 basis points, so it's not ridiculously expensive.
Not at all.
It's gimmicky. It's another gimmick.
I would agree. I would agree. And then what about SPHV, the high beta S&P?
Okay.
I mean, again, this is when we say generally we're okay. SPHV, correct.
Yeah, Morningstar just runs so slowly. SPHV is not coming up. Give me the name of it. Maybe I'll try that.
I don't know. It's high beta S&P is what I found. SPHV. Type in high beta after it. You could tell people, by the way.
Invesco.
Yeah, correct.
SPHB as in boy.
No, HV as in victory.
But she got it wrong. It's HB.
Oh, wow. I thought I found it under HV. Okay.
Nope, you didn't.
I didn't. It's been a long week already.
25 basis points. High beta means it's a volatile thing.
Yep.
Why would you want that? Why would you want high volatility?
These are they have a lot of indexes in there, a couple Schwab indexes. They got some Vanguard indexes, but then they have
what they're doing is they're playing around.
I was going to finish there, but how about XT? Take a look at that one. Exponential Tech. So I guess they're buying the tech companies that grow exponentially. It was just guess. Just
to let you know, the S&P high beta is just 100 stocks.
Yeah.
Again, it's just a little focused portfolio. XT. Morningstar, I am not going to renew my membership unless you speed up your servers.
Add some more servers there.
You do have the slowest response time of any website I think I've ever been on. Well, not ever, but in the 21st century. Wow, XT is not coming up. It's really slow. What's the name of XT?
Exponential Tech.
Exponential. Good thing I can spell. Exponential Tech. Not coming up.
iShares. Exponential Technologies ETF.
iShares. It's not coming up.
Showing an index of developed and emerging market companies.
It is. Exponential Technologies ETF. How come XT didn't come up when I hit it? It says it's the symbol. It's the servers probably, because I'm getting a spinning little sun. Whoa, they outperform like crazy, then they underperform like crazy. They 46 basis points, which is pricey for an ETF.
All right. Well, that's one thing. Hold that thought for a moment, because she goes on to say their advisory fee is 2%.
It is. It's high.
That's really high.
That's one of my beefs with Edelman for years. I pulled up their ADV years ago and said 2%.
Given that I'm 56, plan to work to my full retirement age, does it benefit me to keep the managed portfolio as it is?
Nope.
Even if I'm paying the advisor solely to manage and balance the portfolio. Now, that's a good question, by the way.
Yeah,
if
but they're not doing
somebody,
it right.
They should be getting more. You should be getting more than just portfolio design and management. There should be planning in there as well. But I think 2% is too high. I think, honestly, when I looked at the portfolio, my first take was, I recognize a lot of these tickers, which I did not read on the program here. But then I started looking at those other ones thinking, they're trying to get cute. They're trying to get gimmicky. They're trying to, we got to be in this because it's
hot right now. Or it's been hot.
Yep. So
the Exponential Technologies ETF, what's their number one holding? I bet you can figure this one out.
NVIDIA.
Oh, very good. Next, First Solar, and then Coinbase.
Which you find that in various portfolios,
Crypto.
which I find odd.
Crypto.
Yeah, no, I know what it is, but I just find it odd. So I think, and I don't know anything about your situation. That's one problem to say, I don't need an advisor. You may need an advisor.
Just not a 2% advisor.
Yeah, that's really expensive. All right, we'll squeeze in one more here before we're out of time.
Okay.
This comes from Wesley in Lawrenceville, Georgia. Remember we talked about this earlier. The Ronald Blue Trust is a division of Thrivent, Trust Company.
No, it's a division of Thrivent?
Could all their advisors be registered under Thrivent? Remember, because you looked it up, you were trying to find out who the heck these people were, and we couldn't find them. We were looking around everywhere.
Yeah, they did buy them. Funny thing is though, they're not listed under they're not listed as Thrivent advisors on their own ADVs,
which doesn't make any sense.
But yeah, Thrivent did buy them. It's very strange.
So I was just answering that because we had questions about it. So
yeah, it's very, very, very strange. I'm gonna now that I know that I can do a little more. I see that now that Thrivent did buy them in 2017.
No, so we're going back. Okay.
Yeah.
Thrivent, the old Lutheran Brotherhood.
Yeah. It's funny. I'm seeing a lot of different things. It's kind of.
And so back to that, that's not a firm that we would recommend you use either, because they use the expenses are high. They use commission products. And again, they are not a fee only 100% fiduciary.
Their RIA, and now they are strictly a trust company. They're a private trust, which means they don't have to be like the bankers at a big bank where they have a trust department. They do not have to be registered as investment advisors to manage big, gigantic portfolios.
And if you notice recently, the SEC got in trouble with the courts who said the hedge funds don't have to release all this information. That's outrageous to me. But okay. Very quickly, I'm embarrassed to say that not once, but twice did I mispronounce Jameson McCandy's name on this show. He actually played it back to his wife. He's one of our advisors. He's doing How to Prepare for College and Pay for It online on Tuesday, June 18th.
Oh, that's what we're talking about.
I called him Jason twice. Jason. I just hate myself.
Dude, have they looked at you when you're in the office?
No.
Did they check out
the
color of that hair?
I should be doing your lawn, that kind of thing.
They really should be more forgiving because you're old.
I guess so. So anyway, How to Prepare for College and Pay for It with Jameson McCandy. Yeah. Okay. So, and you can find out more about that great class. It's online Tuesday, June 18th, at ApelloWealth.com. Click on events, ApelloWealth.com. Click on events. I just profusely apologize. He played it for his wife. I was just embarrassed when he told me that when I saw him this week. So, at any rate, I'm sorry.
I cut you a lot of slack. I know how old you are.
Please. I appreciate it. I need it. I'm just
all right. You want to share anything else with our audience before we go?
I think I've done enough.
We're coming up on 30 minutes. So
I kind of got this right now. So
let's see. When is this going to air? Hold on.
Who knows? Sometime in 2025 or something.
It's gonna air after. Never mind. Okay.
After
I'm on another
apocalypse.
Show. After I'm on another show. Okay.
Okay. Oh, okay. That announcement. Okay.
Yeah. Okay.
All right. Good.
Anyway.
All right. That's all I got.
Thanks for
appreciate
being
you
here.
listening. Yep.
Check stuff out, talkingrealmoney.com. You can check on the trip there. You can, set up an appointment to meet with one of our advisors for free. No sales pitch. We want to help everybody all the time. And by the way, we've gotten just a couple of folks, way below 40 people, signed up for the cookout in Madison, Wisconsin.
And we will have 40 there, darn it.
40.
Yes, we will. I guarantee it. If I have to go out the night before
and pick up strange
how you
people
doing?
in bars, I'm getting
free hot dogs, free hamburgers.
People.
Since you like beer, I know where to get some. So join us. More on that at talkingrealmoney.com. So you'll see Don's fancy silver bullet there.
Yep. Thank you all so much for being a part of our program. Please tell a friend or two. If you want to talk with us on the phone, there's a great time to do that where you can just call us on our show that we do in Seattle every Saturday from 3 to 5 Eastern. That number is 855-935-TALK. But call us on Saturdays, 3 p.m. to 5 p.m. Eastern, noon to 2 Pacific. Thanks for being there. Take good care of yourselves. I'm Don. That's Tom. And what do? Well, we hang out talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.